Is this the big stock market crash? My prediction is no, and here's why, broken down into 3 steps. Step number 1 is we need to look at current performance of the market. So far, the S&P 500 has fallen roughly 27% peak to trough. The peak occurred in January 2022, which is just under a year ago. Housing prices have not declined and unemployment has not risen, even with the Federal Reserve raising rates on the federal fund rate from 0% to 3.5% in very short time. And it seems that there are no plans for them to stop raising rates anytime soon. Step number 2 is to look at stock market history for this century. We have 2 recessions we can look at, one from the year 2000 and one from the year 2008. First, let's look at unemployment during those times. In 2000, unemployment went from 4% to 6.3%. That's a 65% increase. In 2008, unemployment went from 4.5% to 10%. That's a 144% increase. Then, let's take a look at stock market performance during those recessions. During the 2000 recession, the S&P fell peak to trough from $1,550 down to $770. That's roughly a 50% drop, and this downturn lasted for roughly 2.5 years. The peak was in April of 2000, and the stock market bottomed in October of 2002. During the 2008 recession, peak to trough, the S&P 500 fell from $1,575 down to $670. That's roughly a 58% drop. This downturn also lasted 2.5 years, with the peak being in October 2007 and the bottom being in March of 2009. Step number 3 is to apply past performance measures to the future. It seems that market bottoms happen after unemployment spikes. And right now, unemployment has not gone up. Both prior recessions saw declines peak to trough of around 50%, and they lasted approximately 2.5 years. This market has dropped only 27%, and it's only been 11 months. A 50% drop in this market peak to trough would put us at 2,500 on the S&P 500, which has technical support shown by this chart. These levels go back to 2018 and during the COVID crash. So to answer the question if this is the big stock market crash, my opinion is that the answer is no, not even close. There is a possibility of much further downside. However, a lot still remains to be seen. But I would say the biggest factor in order to determine if we're going to get a huge drop in the market is unemployment. And in my opinion, this market is not pricing in a spike in unemployment and a meaningful recession. Now, this market is extremely volatile, and volatility equals opportunity. If you want live trade alerts, you can join the private Discord. Just this week alone, we have had 2 trades that have been multi-baggers posting more than 100% returns. A link is in the bio. What we look for is to use this volatility to enter into high risk to reward trades. Ideally, what we're looking for is 10 to 1 or better, and we have hit on many trades over the last 2 months, more than 10 trades that have posted more than 200% returns, with some of them being 10x. That's a wrap for this video. Hit that follow and let me know your thoughts down below in the comment section.